you have a very good understanding of how the loop works and how we navigate ourselves from making unconscious errors all the way to making unconscious corrections. Now, we're going to talk a little bit about identifiers, and again, it's something I have spoken about on one of the periscopes before, but I really want to highlight and drive home the importance of identifiers and why we use them in professional trading. Now, the questions you want to be asking yourself are, what are identifiers? What are some of the basic identifiers that you'll be learning about and utilizing? And why do we need these identifiers? So first up, what is an identifier? Well, it's simple. It's a stencil. Okay, it's a stencil that you apply to the markets daily, which you will fill out in order to recognize patterns. All right, now, put more simply, it's an exact created process to follow to determine deviation. So every single day, you're going to follow a step-for-step process. You're going to fill out like an informational form. And by doing that, you're ultimately suddenly going to start to develop when there are deviations from what you expect. Okay, now those expectations I'm going to teach you when we go through each one of the strategies. I'm going to show you what is the expectation, what should you be seeing, and you will then very quickly pick up when those deviations are occurring and ultimately learn from those deviations. Now, we follow certain identifiers every day, okay, to recognize pattern changes so that we can formulate new trade strategies, right? That's why we don't stop following the identifiers. We're always watching the identifiers to learn when potentially new patterns are developing. Now, one of the best examples of an identifier is volume. So let's take, for example, over the last 10 trading sessions, you've suddenly recognized that whenever the volume exceeds, say, 50,000 contracts, you've recognized that price tends to very aggressively fall or rise. Okay. Now, if you've noticed this, you've recognized a pattern based on the identifier of volume. Therefore, if tomorrow or the day after suddenly you see 50,000 contracts come into the market, you know that you need to be getting onto that trend and following the market in the direction of price. And that's what the identifier is all about. It's all about you recognize a pattern based on the identifier, you understand, interpret, learn, create a strategy around that pattern so that when those identifiers crop up again, you simply just execute on the objective information. Okay, so what are some of the basic market identifiers? Firstly, volume, volatility, stops, time, relative changes, as well as the delta. These are, the identifiers we're going to use quite extensively. Not just through not just when I introduce them to you in the next couple of slides, but also when we move our way through units 6 to 15. We're going to extensively cover these in every single one of those chapters. Okay, now why do we need identifiers? That's probably the question on your mind, Well, firstly, to develop a consistent approach to view the markets and therefore develop a consistent strategy to execute in the market, right? That's what it all boils down to, is that when we have an exact process, you've got to think of that exact process like following a recipe in a cookbook. Okay, if you follow the recipe from number 1 to number 10, the outcome is going to be favorable. Okay, and that's the important thing. That's why we develop a consistent process or a consistent approach, because it will then allow us to develop consistent strategies, but more importantly, consistent performance. Now, one of the biggest fallacies I find in trading is that you need multiple approaches to become successful as a trader. Okay, what I'm going to tell you now, and I'm going to reiterate this when we get to the strategy section. You only need one strategy, guys. You only need to be successful at one strategy. Okay, the example I always use and I mention is if you look at the likes of Apple as a company, right? Apple is extremely successful. They are one of the wealthiest companies in the world. And Apple produces the same iPhone X in the same workshop with the same process, with the same tools, same machinery, and it takes the same amount of time. Everything is the same. Okay, they simply follow a step-for-step process to develop the iPhone X. Now, it's no different for us as traders. Okay, we simply have to follow a process step for step for step. If we do that with one strategy, maybe 2, maximum maybe 3, we can be very successful. Okay, the whole art to trading is to find 1 or 2 strategies, really master them, and leverage them up. just like Apple does. They leverage up the amount of products they're producing, with one simple process. Okay, now note, obviously, we need these identifiers because obviously with a consistent approach, or with these identifiers, you can obviously recognize new patterns. Okay, so it's a way of developing your pattern base. And then obviously lastly, with these identifiers, you can ultimately make corrections to a consistent approach, but with a sporadic approach, however, where you're just looking at things, putting in lines, etc., it's very difficult to make any kind of meaningful adjustments, okay, that'll ultimately have any impact. So that's how you got to look at it when you're following a step-for-step process, where you're just looking at the identifiers and making reference. You're following a very simplified process, which is going to give you a very, very impactful amount of information, and that's what it comes down to. Now, what we're going to talk about on the next slide is I'm going to finally introduce this template that we're going to use through Unit 6 to 15. Now remember, this template is in effect a process that ensures we don't have a closed loop, okay? Like I said, this was point 2 of the loop. The first point was we make a decision. The second point is that we have a very conclusive template that will ultimately allow us to move ourselves from making unconscious errors to making unconscious corrections. So the template looks a little bit like this. There are 3 unique sections: observation, identification, and execution. Now, within each of these sections, we're going to cover a variety of identifiers. But the template ultimately follows a very chronological order, from firstly observing the necessary conditions for a strategy to exist in, then identifying the strategy, which I'll be teaching you one of the 10, and then lastly the execution in a dynamic manner of that strategy, with key focus on trade management. Now, let's view each one of these sections on its own and have a look at some of the identifiers within each section. So under the observation, we have 2 sub-indexes. The first is obviously pre-context and precondition. So this is the state that you want to find the market in. It's the market conditioning, or the trade location, or the market context. This is the kind of thing you want to be thinking of in terms of observation. Now, these observations ultimately show us the prime conditions in which a certain strategy can exist. So some of the identifiers we'll focus on are the time frame participants, the market context, the trade location, as well as volatility. Now, once we've observed the potential pre-context or preconditions, we then move on to how to identify, or the identification of one of the 10 unique strategies you're going to learn. Now, obviously, these will be effectively the strategy identifiers or the characteristics of each strategy. So some of the identification parameters are momentum and counter trend, passive aggressive flow, volume, time, flow, delta, and relative changes. Then once we've obviously identified one of the 10 strategies, we then focus on the execution identifiers. So what identifiers can we utilize to ensure we're effectively executing? And those will include things like entry, timing of execution, stop placement, target placement, risk reward, as well as leveraging and how to leverage. Now, in the next slide, we're going to discuss how you'll complete each one of these sections that is provided in the template. So this is what the template is going to look like. This is obviously the first section of the template you're going to complete. But very simply, before we move on to that, how does it all work? Okay, well, first thing you need to do is you obviously need to download from the LMS system, where the course is. You need to go and download the form that says footprint tool template. Okay, now this tool is an A4 page, so it'll include all 3 sections on it. I will show you what that looks like right at the end of this unit. But download that, make a couple of copies. You are going to fill this in every time we go through one of the strategies. You're going to fill it in with me. Then at the end of each strategy unit, when we do the live example, again, you're going to fill it out. And then when I give you your drill sessions, you're going to fill out another one. So for every single one of the 10 strategies, you're going to fill out one form. And every time you find that strategy in the live market, or when you're practicing the drill, you're going to fill it out again and again and again. Okay, so you're going to become, by the end of the course, you're going to fill out a lot of these templates, but you're going to recognize how important and how valuable the templating is. Now, just bear in mind, guys, there is no right or wrong. Okay, this template can be filled out in whatever way you want. It's just giving you a manner in which you can construct your thoughts in a very simplified manner, but also in a very constructive way. Now, why I like this form so much is because you're going to be observing purely facts. Okay, you're not viewing opinions, you're not writing down anything other than the facts that you're extracting from the market. So I'm going to show you how to complete the template and ultimately extract the facts from the market, and then how to make decisions based on those facts. Now, important, you can apply this to any time frame. Okay, it doesn't matter what time frame you're trading within. It doesn't matter if you're trending or not, right? You can do it over a market that's been trading for the last 3 days, or a market that's been trading for the last couple of minutes. All right, this can be applied to any one of the 10 strategies in any time frame. Okay, now, the first thing we need to look at, and as you can see in front of you, this is the strategy observation section. Now, you can very clearly see on the left side, on the left box, we've got market context, and on the right box, we've got market conditioning. Now, these are the two sub-indexes of strategy observation. Now, bear in mind, as I mentioned earlier, this is nothing more than the preconditioning of the market in which we want to trade, because this is the prime conditions to execute our various trade strategies within. Now, the first thing you're going to do is, let's say you've observed strategy number 6, absorption and auctioning. The first thing you're going to do now is come and complete the question. So the first thing is the market trending or is it consolidating? And you'll simply circle it. Then, is the market balanced or imbalanced? And you'll circle it. Then the trade location. Where are we trading? We're trading in the previous day's value area, we're trading at the extremes, or we're trading outside of the range. Where are we trading in terms of price? So that'll give us a little bit of understanding about the market context. Then, in terms of market conditioning, we want to talk a little bit about what are the time frame participants. What are we seeing? Are we seeing a lot of noise from algorithms? Are we seeing large, big orders come into the market? Or are we just seeing a lot of passive, responsive type orders coming into the market? So that's what we'll talk about in terms of time frame participants. In terms of liquidity, is there a lot of liquidity? Are the market conditions quite thin? And then volatility, is there volatility or not? Okay, so once you've done that, you've effectively completed the first part of the template, which is the strategy observation. So once you've observed the conditions for the strategy, what's going to happen is, over time, you're going to develop a very strong understanding of the prime conditions in which your strategy will work. Okay, by doing this every single day, you're going to very quickly recognize, when, for instance, a breakout trade works well, or when, a hiding behind the elephant trade strategy works well. Just by doing this, you're going to very quickly learn to understand the prime conditions. And ultimately, what that's going to lead to, is you're going to recognize when there's higher probability conditions and when there's lower probability conditions in play. Now, on the next slide, we're going to identify what are some of the identifiers you need to recognize to show you that your trade strategy is in play. Now, this is the second section to the template that you're going to complete, and this is effectively the strategy identification. So these are the identifiers that you will need to recognize in order for one of the 10 strategies to be in play. Now, the first thing to look at is the two subsections, which is interaction and then the metrics. In terms of interaction, we're going to focus on was there initiative or responsive type price action? Was there passive or aggressive type price action? So it's the real interaction between the buyers and sellers that we're going to focus on. Then we're going to talk a bit about metrics. Some of the metrics we're going to focus a lot of attention on in the template is volume, time, the delta, the cumulative delta, as well as the relative changes. Now, once you've observed this interaction and the metrics, you will learn the interaction required for the chosen strategy to work well, as well as the accompanying metrics to guide you in the decision-making process. Now, we're going to then move on to the execution part of the template in the next slide. So the third section of the template is all about strategy execution. Again, the two subsections will include money management as well as the application or the decision-making process. Now, some of the factors to consider, or the identifiers we're going to consider with regards to money management, will include passive or aggressive execution, risk stop placement, target placement, as well as the risk reward. And then in terms of the application side, timing, whether we're preemptive or exact, as well as leveraging, or better known as pyramiding. Now again, as mentioned in the previous slides, the whole reason we do this is that over time, through completing this, you're going to learn what the best methodologies for execution are based on each strategy. For example, sometimes people pyramid without pyramiding in the right type of trade strategy, and ultimately all this does is skew the risk and destroy the probability of success. So this template is going to allow you to determine when do you want to leverage, when do you not want to, when do you need to be aggressive in your execution, when do you need to be passive. Let's view the template in its entirety before we close out the unit. So on the right side of the slide, you can see pretty much what the template looks like. Obviously by this stage, hopefully you've downloaded it. If you haven't, it is provided for you on the LMS system. Now, the first thing is, I just want to briefly go through some of the elements that weren't spoken about. The first is the first section, which you can see at the top of the template. And you can see that obviously it says the trade strategy. So first thing is, write down what is the trade strategy. You can write it down, or you can select it from one of the 10 boxes. Circle it, nice and easy. Circle the strategy, but then more importantly, go and draw the strategy. This is so crucial. As human beings, our brains tend to hold on to picture images a lot easier than text. So go draw it, use different colors, annotate it, personalize it, really make it your own drawing. That way you're going to remember it a lot easier. Now do note, obviously, every time we do one of the 10 strategies, you're going to fill this out. Every time you recognize one of the 10 strategies in the marketplace whilst practicing, I urge you to complete it. It is there for your benefit ultimately. Now, if we go to the bottom part of the template, you'll notice 3 boxes in the bottom left. Now, don't worry if you can't see it here. Obviously, you will have an A4 PDF page of this document. But in the bottom left-hand side, there's 3 things written there, and that's what I call the accountability section. Now, it includes the time, the habit/30, and assign. And all this is saying is that, firstly, write down the time. How long did it take you to complete this? The reason being is that a lot of you are going to find this rather monotonous and time consuming initially, but if you write this out every single time, you're going to very quickly realize how quick you can get at completing this. Okay, so that's the first thing. The second thing is, obviously it says habit/30. Again, if you want to get good at completing this and you want to develop real habits with this template, write out the days. How many days out of 30 have you completed this? Again, I urge you to try it for a 30-day period. Write day 1, day 2, day 3, every single time you complete it. Complete and build that habit through consistently completing the template. Then the last is signing off, and this is crucial. This is signing off that you've done a complete debrief, and you've done it to the best of your knowledge, and you're giving it your stamp approval. Okay, it's so important you do this. Again, you might think it's silly, but it really does hold you accountable to completing the document. All right, now obviously you can do this electronically, or you can write it down. Do note, guys, that habits take time to form. Okay, what I am going to say is, if you want to get good at this template and you really want to build consistency in your trading, you're going to need to complete this every day. All right. Now, don't worry, like I said to you, there is no right or wrong, okay? This is a situation of the perfect imperfection where, you might want to initially write down everything perfectly and try and get every answer right and perfectly get it right, but it's not about being perfect. It's just about forcing you to think, forcing you to write down your fact-based observations. And over time, if you write these down, eventually you're going to become very perfect at your trading, even though you were doing imperfect observation analysis. Okay, and then obviously, motivation is a crucial part. I know it can be time consuming, so just remain, motivated. Keep reminding yourself of the big picture, which is that if I do this for 30 days, I build consistency, I become profitable, and I get one step closer to my dream of becoming a professional trader. And then last, if you do miss one, it's okay. Right? Don't put a backlog of days that you need to fill out. Skip it. Move on to the next one. Let bygones be bygones. Okay? Don't hang on to old forms to complete. Otherwise, what's going to end up happening is you're just going to create anxiety. You're going to feel stressed rather than actually getting on with the job at hand. Now, note, you will get quicker over time, guaranteed. Take this from where it comes, from experience. You will get quicker at filling this out over time. All you need is to understand that as you do it daily, as you observe your thoughts daily, you're going to get better and quicker at observing them over time. Now, note, there's one thing I can finish off with, this template is probably my greatest gift to you throughout this course. It's not all the information you're going to get, but it's this exact process. I can, I don't want to use the word guarantee, but I can give you a really strong sense that you will develop a real good understanding of how important a processed approach is by doing this template. More importantly, I think you're going to want to go and create your own processes, your own recipes for success once you've done the course. So please accept this gift and really make the most of it, because it will benefit your trading, not just in terms of consistency, but definitely overall performance. And then lastly, just remember, there's a lovely quote at the bottom of that template, and the quote just simply says, "The successful person is the individual who forms the habit of doing what the failing person doesn't like to do." Okay, humans don't like to observe themselves. We don't want to fill out forms and write out stuff and bog ourselves down with all sorts of information. All right, so if you are willing to do it, you are going to succeed. That brings us then to the end of Unit 5, the end of the theoretical section per se. We're now going to move on to the strategy section, and we're going to build those 10 unique strategies.